I mean, real estate is one of the oldest investing forms. It's investing in a human necessity. What I'm talking about is residential real estate.
Yeah.
People always need a place to live.
Zach, thank you for coming. I'm really excited about today because I just got my first reading glasses last week. You had a career as an optometrist, and then you created one of the largest build-to-rent portfolios in the country. Welcome to the show. Thanks for coming.
Yeah, excited to be here, Latane, and I empathize with you. We all need reading glasses at one point in our life. That's like a life milestone you have to get over. But yeah, excited to be here. Thanks for having me on.
Interesting information. The audience might not know this. Everyone will eventually need reading glasses. Is this true? Is that accurate?
Pretty much, you lose your ability over time. Usually, plus or minus around the age of 40, you
Yep.
start to lose your ability to see close. So yes, that's something that everyone can look forward to if you haven't had reading glasses already.
So for those that don't know, so you're in the medical field. Was it you and your wife also? Is that correct?
Correct. Yes.
Awesome. And then you made a decision to, hey, we're going to go and move into the real estate world. Like, how did you come to that decision? Was there something that happened? I'd love to hear the story.
It was a slow progression over time. So just to give a quick backstory on myself, Latane, for the audience. So as you mentioned, I'm an optometrist by education. So is my wife. We met in school. I was on Air Force scholarship. So I was a captain in the Air Force for about 7 years. The first year of which, when I joined the Air Force, I started investing in real estate. And this is probably, 15, 16 years ago at this point. But bought a duplex, lived in half, rented out the other half, fell in love with real estate. And since that point, I've never stopped buying real estate. I'm not saying I've made money on all deals, but I've always invested in real estate because I just love the concept of it. And I really understood the math around building wealth and passive income in real estate. We started to invest in markets outside of our own local market because we saw better opportunity. And we understood that, to be successful, most people build a diversified portfolio, being strategic about where they invest. And as we continued that path, that eventually allowed us to replace our active income, both as optometrists, which was, high income. I never had the idea of like, hey, I want to quit what I'm doing. I actually loved optometry. I'm still very passionate about helping people see, but now we're able to have a different lifestyle. We still are active in eye care. We have international humanitarian missions and cataract clinics that we establish all over the world, so we can actually have a bigger impact and still share that passion. But ultimately, real estate allowed us to replace our active income and live a lifestyle that we wouldn't have had otherwise, not be reliant on, our jobs and our careers for income. So that was kind of the path for us, and we've just been going ever since.
Nice. I mean, I think when I moved here, I moved here from California, and I'm in the DC area. So, I started a title company. I was, I'm going to do a 2-unit condo. I'm going to do a 3-unit. Eventually, I got to the point where it's like, I need to choose a career here. I'm going to focus all in on title. Takes a lot of time. So you mentioned like, hey, you started with certain things and then you looked at other opportunities. Like, how did you determine whether, you're doing 2 projects, 3, 5, look at other areas? How did you determine what you could handle? And tell us that progression.
I'm someone that always, I'm kind of like of the mindset, if you've heard like ready, fire, aim, I like to like jump into things. And often, that's allowed me to have a lot of success and also create a lot of challenges as well. But I think that's kind of that entrepreneurial spirit. It was all about acquiring more. I really liked real estate from a tax standpoint, from the ability to use leverage strategically. In the beginning years, I was really focused on cash flow, as many new investors are. But over time, I learned how you can scale real estate in a tax efficient way to really build true wealth over time. And so I just got hooked, and I just was always looking at more projects to either earn capital or to acquire more rentals. It's all about, for me, is about acquiring the rentals that I held over time. But capital is the most limiting constraint. So really any extraneous capital we had, we would put into rentals, and then I would do a lot of different things in real estate, like many people do. Started out with wholesaling and flipping and all these things to build extra income to then put into rentals. But really the pivotal moment was when we started to invest out of state, because as many people, and possibly even in your local area, like for certain areas in the US is a very diverse place. And it's very likely that no matter how experienced you are or where you live, that maybe your local market is actually not the most strategic place for you to invest. There's a lot of markets in the US right now that even over the past few years, we're seeing double-digit appreciation, double-digit cash flow returns. And so we just wanted to be smart investors and just focus on the areas that were more conducive with our goals, where we saw better opportunity. Now, that took a lot of time and energy to build our teams and systems in those areas. But once we figured that out, it was easy to replicate that in new markets. And then we could be really intentional on where we were investing, where the best opportunity was. And that was the birthplace of our company, Rent to Retirement, where we essentially help people do the same thing, following our same process, where we handle all the management and things for the properties because we've already built that system for ourselves. So I don't know if I answered your question fun or
Yeah,
not, but
it's actually a really good point. And I think, one thing you mentioned was like capital is the biggest restraint. And so I think as you had to figure out how to go to other states, what did that look like initially? Was it capital from friends and family? Was there another, way you were getting that access?
we didn't raise capital early on, probably in our first 4 to 5 years investing. It was just, we were just hustlers, right? So we lived a modest life. Even my first house I bought was a duplex, so that wiped out all my living expenses. So it's being strategic like that to basically I mean, we basically have invested 90% of our income or greater almost every single year. And we found ways to earn more income that we could put into real estate or be, I guess, strategic or defensive on the expense side to have extra capital to invest. But when we first started investing out of state, as many people, I think, when they think about this idea, it seems daunting, right? Because there's a lot of different markets to look at. It's like, where do I even start? And building a team in an area was very challenging. We got burned by a lot of contractors. We were investing in locations we really didn't know anything about to start with, that really had a lot of high tenant turnover and damage to the property. And so I've learned a lot of those lessons. I still have some of those scars, right? But it's all part of the process. And we never let that stop us from growing in our own portfolio and learning from our mistakes and applying a better process that has ultimately allowed us to be successful. So really, it was just like nose down, just keep going, right?
Entrepreneur had to figure it out and did. Nice. And you've been doing it for a long time. I mean, you've been doing it for 10 years, rent to retirement. And we were talking a little bit about you've created some really cool investment opportunities, for different people. So, people, hey, I want to get into real estate. I want to get into commercial real estate. How do I get into it? Tell us how you kind of make it easier for investors to get diversification and some of the cool programs you guys offer that others, don't.
Just to lay the foundation, so Rent to Retirement is a turnkey company and a build to rent company. And so that's a very broad term. It's a buzzword that a lot of people use. And historically, when people think about turnkey, if they're familiar with the term, they think about like a Midwestern property, like a 1920s house that's been renovated in like a C-class neighborhood. Like that's not what we do. When we talk about turnkey, the first thing we want to do is identify the right markets that have the best opportunity. We have all sorts of criteria we go through. We want to be in landlord-friendly states for legislative purposes, tax-friendly states. We want to be in areas that have population growth and economic growth below the median house price point, which is roughly $400,000. So most of our new construction stuff is in that $200,000 to $300,000 range. We want the cash flow numbers to be attractive, right? We want to achieve at least a double digit, like a 10% or greater cash on cash return if you're using leverage. So first we identify the market, and then we build our teams and systems in those areas where we make those investment opportunities accessible to our investor community. So regardless of where they live or their experience level, they can own real estate in some of the best performing markets where our team really handles all the groundwork for them. This means building or renovating the house, leasing and managing it for the investor, and really helping them put together a comprehensive plan. A lot of investors that invest with us are people that maybe they live in an expensive market and their local real estate doesn't make sense, or it's inaccessible because it takes a significant amount of money to buy an expensive house for one rental, where you could put that in a different market and buy a whole portfolio that has better cash flow. Or they're people that are new to real estate and they kind of need that hand holding to help them set themselves up for success. We also have a lot of busy professionals that like real estate, they want to own real estate, but they don't want to self-manage, especially from a distance. And so we really make the best markets across the country and the best opportunities accessible to everyone, where our team handles everything for them. We have some really unique opportunities for investors that they've likely never heard of to allow them to be more strategic, because our goal is to give people a comprehensive approach and strategy. And this is different for each person, but help them build a kind of an individualistic strategy to acquiring real estate, following the fundamentals of real estate, to achieve whatever financial goals or level of success they want to achieve. If that's just retiring a spouse or supplementing their income, diversifying their portfolio, we make that easily accessible for them. But we do have some unique programs I can dive into if you'd like, where we can 5% down loan options that people likely haven't heard of, where you don't have to put 20 to 25% down. We also have wholesale pricing on new construction assets because of our relationships with national builders. And those are unique things that we bring to the marketplace to allow people to be more strategic.
So is there a minimum investment requirement to get into access to get the wholesale pricing? And what does that look like you have a project in Texas and I'm thinking of going there, I want to invest in your company, but also I like the community that you're possibly building in and I want to take advantage of that?
Yeah, so we help people build their own portfolio. Like, you're 100% owner of your real estate assets. And these are mainly new construction, single family and small multifamily, so 2 to 4 unit investment properties. So you can acquire them however you want. Most people use leverage, because leverage is an extremely powerful tool in real estate. Allows you to have a better return on investment, buy more properties, tax advantages, etc. You can use whatever financing you want. You can use the traditional, conventional loans where you put 20 or 25% down on investment property, or you can use some of the strategic loan options that we've created with local credit unions where you can buy multiple investments, up to 5 investment properties, true investment properties with as little as 5% down. These are 30-year loans.
Mhm.
So like these are some of the unique things that we make available to our investors. We don't charge investors anything to work with us. We make our money through building and selling and managing houses, and so there's no fee. You're not investing. We don't have a fund or a REIT.
Yeah,
You're not
yeah, no,
investing in
it's
our
helpful.
company. So it's about helping you buy and build your own portfolio in the markets that make sense and also make sense to you. And how you finance them is really up to you. We of course have recommendations based on the goals we discuss with you.
Cool. What does that ongoing relationship look like for you? And so, thanks for letting me understand a little bit more. I was thinking build to rent. You might be building a large, property and selling individual units to these guys at wholesale prices, but that makes more sense. Is there ongoing communication with you guys? Is it like a coaching platform also? Or are you saying, hey, this is my specific one I'm trying to do, and you're kind of consulting with them on that project?
Yeah, we build long-term relationships with all of our investors because I truly feel that real estate investing is a lifelong journey. No one reaches true financial independence in most cases from buying one investment property. It usually takes a strategic portfolio of multiple homes, likely in multiple locations, to really build a sustainable portfolio. And candidly, that's what it has allowed our business to have such explosive growth year after year, is the fact that when you're working with investors, they are coming back to invest in more properties, assuming they have a good experience, right? Is that they're here to continue to invest. And that could be one property a year for some people. It could be one property every 5 years. It could be 10 properties every year for the next person. It depends on their strategy and their goals. But we want to help people build out an overall plan, having the right LLC structure in place, right? So they can be a strategic investor. Like our goal as a company, just me as a personal investor, is like, because we have a successful business, but we have a high tax burden. So my goal is to buy enough real estate every single year to offset close to all, if not all, of our income every single year, because that gives us more money to reinvest
Mhm.
that has additional tax benefits. And you can do that in real estate. It's a beautiful thing. So utilizing those same strategies as an investor is really important to help you execute your goal, like likely expedite your goals as well, and ensure that you're going to be a successful investor long term. So that's just part of our process, is helping people build out that plan and then actually execute it, right? At the end of the day, it's buying good properties in good locations with good teams, and just repeat, rinse and repeat, making sure you have the right tax structure and all these things in place. Make sure you have the right title company to accomplish your goals. I mean, that's speaking to your language, right? That could be, title company is a vital piece of that. But yeah, that's how we work with investors on an ongoing basis.
You'd mentioned the ongoing management of the property. So is that something that you guys will be able to do remotely if you're not in a specific market, or how does that work?
We work in 18 different markets, mainly Midwest and Southeast. So some of our best performing markets are in the Sun Belt. These would be areas like Texas, Alabama, Georgia, Florida, Carolinas. We also have a Midwest presence in Missouri, Ohio, Indiana. These are specific markets that we've identified as meeting our fundamental criteria and where we've built team. Our marketplace that has anywhere from, I don't know, 50 to 70 properties for sale at any given point in time. And these are properties we've built, leased, and managed for our investors, are in these locations that investors can select from. We would not take on, a random property from in a market where we don't have a presence in, because that wouldn't make sense. So these are working in the markets that we've established teams in.
Cool. I have a house in Pinehurst, North Carolina. We have a team down there, and I've looked into some options of could I manage it myself remotely? Not worth it to me. Not worth it to me. I have good people in market, like you said, that can handle all the stuff that pops up, such as when the golf simulator breaks and stuff like that. A lot of the properties that you guys have, are you Airbnb? Are these being Airbnb'd? Are they being rented out to long-term renters, for the stuff you're managing? What does that look like?
Vast majority of them are long-term rentals. I will say we do have 10% or more that they make sense for a short-term rental or even a
Mhm.
medium-term rental. And a lot of investors that do that route, they're specifically interested in short-term rentals. That's kind of a different ball game. Like we like the
Yeah.
fundamental, like bread and butter housing in areas that have an undersupply of houses, that have a growing economy and a growing population. So you can keep that house rented. That house will continue to appreciate. But we do have some people that want to do short-term rentals because they like that. Maybe they want to do the accelerated depreciation, with a cost segregation study on short-term rentals, or if they're a real estate professional on the long-term rentals as well. So that could come into play on some of their strategies. But historically speaking, it's the traditional long-term rental in a growing market.
Do you have a team in place that's looking at a variety of data to help you determine the best markets? How often does that change? What does that look like?
We are always keeping our pulse on, the evolving markets because real estate is changing all the time, right? And you could have an area, we want to be in an area that's just starting to get that influx of growth, right? So that's where you really get to ride that appreciation wave up, is where you have an area where there's a significant influx of job opportunities. We can already follow the population trends, but yeah, we have an entire team around market acquisition in areas that we want to focus on expanding to, and we're certainly opening up new markets, usually about every quarter, just following the process we have in place. But there's a lot of markets. Like I said, the US is a very diverse place. There's some areas just from supply and demand constraints, right? Just areas that have an undersupply of housing. We have a deficit of over 7.5 million houses needed in the US. There's some areas that are excellent investment opportunities still today, regardless of where interest rates are at or whatever the rest of the world is doing, or the US economy in the marketplace with what interest rates have caused. There's still unique opportunity. It's just about knowing where to invest.
Pros and cons, new construction versus rehabbing homes. Is there an answer? The one's better than the other? Does it depend on the area? What are your thoughts on it?
I think it depends on the investor and really what they ultimately want to achieve. But if I had to choose, and this is a reflection of how our business has evolved over the years, we focus about 80% on new construction. We love new construction. If you think about owning a rental for multiple years, whether that's 5, 30, 50 years, whatever the case is, I mean, owning a new construction house, first and foremost, new construction is usually in growing areas, and builders are building in areas that have a need. And in most cases, for a reason, there's strong demographics around why they're building in those areas, no different for us. But we like new construction from an asset class because it's new. You don't have minimal maintenance on the house. You have builder warranties anywhere from 1 to 10 years, like
Yep.
structural can go out to 10 years. So you've really better tenant quality and longer occupancy times, which leads to less turnover, less vacancy. So it's more predictable performance. New construction attracts better quality tenants that tend to stay longer. And yeah, there's more predictable income with just less maintenance on it in a more growing area. So what we've seen over time as a whole is that new construction usually has more predictable performance and also has better upside, both in appreciation for home prices and rents. And that's why we focus heavily on new construction. The downside, or when you're comparing and contrasting that to, say, a Midwestern rehabbed house, where that could be 120 to 150,000, which may be more accessible to more people because it requires a lower down payment. That property in the Midwest for 120,000 may cash flow more than a 300,000, or better, have a better return on investment based on cash flow analysis or cash on cash ROI year one than, say, a $300,000 new construction. So new construction does have a little bit higher price points out of the gates, but it usually has more consistent and better returns long term. And I'll also say that something that's strategic we bring to the investment marketplace is the fact that, as we were talking before, we're builders, but we also have relationships with national home builders. We're able to buy their properties at wholesale type of discounts and then pass those on to the individual investor. That's a competitive advantage that we bring to the table that I think makes new construction for our investors even more attractive. And that could be significant. Say on that
Yep.
$300,000 house, you could have $30,000 to $40,000 to play with as the investor come buying through our marketplace, where you can take a price reduction for $30,000 to $40,000 on the house. You can get that $30,000 to $40,000 back as actually managerial credits after closing. So that's actual cash in hand
Hmm.
post close, which could cover part or all of your down payment potentially, especially if you're using a 5% down payment and
Yeah.
you're getting 10 to 15% back. So, I mean, those are some really unique strategic things in the new construction space because of
Mhm.
economies of scale, because we're doing, thousands of transactions that we're able to bring to our investors that they wouldn't access elsewhere. So I think the combination of all those things make new construction a really unique asset class. But at the end of the day, it's just less headache
Yeah.
owning, even if it's an older house that's rehabbed.
One thing with new construction, I have a couple investments and I've looked at, oh, do I add another bedroom here? Do I add another bedroom here? Now, it makes sense for short-term rentals, but if it's not a short-term rental, is there a point where another bedroom just is not helpful?
I mean, that would be really market dependent and specific around, like, what are we talking about? Is it a two bedroom you're turning into a three to a four, 4 to 5? Like,
Mhm.
there's a law of like diminishing returns, I
Sure.
think, in some case. So we're intentional around when we're building or rehabbing a house, what is in highest demand. And we really focus, what we try to focus on is that 3 to 4 bedroom, because that's the largest tenant pool. And that's the sweet spot for your like rent to price ratio, and where you can really optimize returns and the most people looking for that type of asset. And that's on the long long-term rental side. On the short-term rental side, in some cases, like adding an extra bedroom, like what we'll do when we're rehabbing a house, not building it, but sometimes we'll make like an office a conforming bedroom.
Mhm.
We'll, if it has a window already, we'll put in a closet system. So now you can call that bedroom, because then you can have your occupancy that you're advertising increase by whatever the bedroom count is. So there's some unique things there, but really with the build to rent, like we're focusing on what the highest demographic is looking for in terms of their rental needs.
So you've got a market that's a little crazy right now. Yeah, how do you see everything that's going on and how you think it affects real estate?
We've been through a couple different cycles, or a few different cycles now, actually. I mean, if you think back at COVID times too, I mean, that was an uncertain time that had a technical short recession and people were concerned. I mean, obviously when there's uncertainty in the market, it drives a lot of investors to pause on what they're doing or maybe be more
Mhm.
conservative and pull back. But it also, for those who have been in the game long enough, they understand that investing in real estate, I mean, real estate is one of the oldest investing forms. It's investing in a human necessity. We're really talking about, what I'm talking about is residential real estate.
Yeah.
People always need a place to live, and the fundamentals of real estate don't change. And so what we often see is when there's uncertainty in the marketplace and stocks are all over the place and there's uncertainty, if people are going to invest, they tend to put their money in alternative assets like real estate where there's less volatility.
Mhm.
Because the reality is, if you have a long-term mindset around investing, and the same could be applied to stocks and things like that, but certainly with real estate, if you're investing in an area that has an undersupply of housing, and so people need housing and the population is growing, and you're catering to a demographic, like I said, we're not building high-end luxury homes. These are bread and butter rental houses where, as I mentioned, people always need a place to live. All real estate goes up over time. And that's why I haven't taken a single year off. No matter what is happening in the news, in the global economy, and the US economy, interest rates, whatever, I've always continued to invest applying the fundamentals of real estate, because I know over the long term it makes sense. And that's just my mindset. But we also see that with our investors as well. We've actually seen an increase in interest this quarter because of that same thing. People are like, oh, I'm tired of the emotional roller coaster with stocks, and I want to diversify my assets into predictable housing.
All right, we're going to jump into this. We can always go back to some other things, but we do have a rapid fire section here. One thing the medical field and the real estate industry have in common.
I think there's a lot they don't have in common. I'll say from a business standpoint, because we did own our private practices, and I would say this is applicable to real estate, just in general. There's a lot of people that make a lot of money in real estate businesses or healthcare that
Mhm.
are really good at making money, but are not good investors. And I think that's
Yep.
really interesting for like the home flippers out there. And we see this time and time again. People are making good money, and then they're not using it to invest strategically. They're paying a ton in taxes, and that would be applicable of all fields: healthcare, real estate, everything. You need to learn how to be a good investor to keep more of the hard-earned money that you have and really invest that in a way where your money can work for you and compound over time. And so we have a lot of healthcare professionals and a lot of the real estate professionals that are making really good money, but they need a way to funnel that into minimizing their tax burden
Mhm.
and then creating residual income over time.
That makes a lot of sense. And in fact, what you're talking about, I've read many times, I've met many people that are great entrepreneurs and horrible investors. In fact, they made a lot of money as an entrepreneur and they lost a ton of money investing. And it actually is a problem within that industry of entrepreneurs. So I think you bring up a really good point. And so part of your program is the education on all of the things that happen with depreciation and how you should manage it and all that kind of stuff, right?
Yeah, absolutely. And it takes time, but at the end of the day, it's like, let's build out a strategy. Let's get that first investment property done, because that's where the real learning starts to happen, is once you have a tangible asset that you're actually investing. And how do you scale that, right? That's where the majority conversations come in, is how do you scale? Because there's a lot of roadblocks there on and teaching people how to go from 1 to 10 to 20 to 50.
An investing myth you would like to debunk.
Is that real estate is hard or challenging? It doesn't have to be. Certainly it's, you need to be educated, and you will have some fluctuation in your house potentially over time. Like, you'll have repairs you need to make. You'll have tenants that leave. That doesn't mean you have to deal with those, but like those things do happen. So real estate investing is not difficult. It doesn't always have to be difficult. There's ways you can invest where it's not difficult. It's not just for the wealthy either. There's a lot of ways you can invest with small amounts of capital and still be successful. One myth around turnkey that we debunk all the time is there's a big kind of dichotomy out there. People think, oh, I can get better returns doing it myself
Mhm.
versus investing turnkey, because especially this is true of people flipping houses and like doing value add, where when when they're assuming turnkey, they don't have any upside potential. They're buying it where the house has already been renovated. Like there's no equity component. And we just break that barrier down all day because, and this is unique to our company, because of the economies of scale, like we talked about with the builder relationships, because we're doing volumes of transactions, we're actually able to allow people to buy new construction assets significantly below market value where they do have equity. It's just opening your eyes to the right strategy, investing in the right markets, and what aligns to your goals the most.
And I'm going to dive deep in on this because I really like it. So, like you said, everyone's belief is if I do it myself, I'm going to save all this money, right? And so, can you kind of walk as someone that's interested in investing in your company? Hey, let me tell you, if you do it yourself, you're going to have to hire a GC, you're going to manage the property, you're going to have to still rent it out, you're going to do a variety of things. If they work with you, give us a start to finish of everything you guys do.
So the first investor that comes in, regardless again of their experience, of their capital position, where they live, it doesn't matter. We work with investors from first property, brand new investor, to people that have, 9-figure portfolios. The first thing we do is we set up consultations with them. And again, we don't charge investors anything. We make our money through building and selling houses. But the investor comes in, we have a conversation with them about what are your goals? What is your experience? What do you ultimately want to accomplish? And really that seems like a fundamental thing, but so many people don't have their mindset aligned with like reality and their goals. Because if you're someone that doesn't have experience, renovating houses and managing and things, like maybe you're not the best person to do that. Like maybe your time is better spent like focusing on your career path where you earn the most amount of money and then you have the best return on your time. But the first thing we do is have conversations with them, help them build out, general strategy. That's multiple conversations, sometimes over months, sometimes over weeks, depends on how fast a person wants to go. And then we build out a buying strategy. We have their buy box, their criteria, and then match that with the market. What loan options best fit your goals? Go get pre-approved with those lenders, come back, let's identify the markets and the properties that best fit your goals. Whether financing or option, whether it's the 5%, 20%, doesn't matter, whatever fits your goals the best. And then it's just identifying the properties, putting those under contract, going through a normal closing process that everyone is used to, having your diligence of appraisals, inspections, title work, all the things that are important to close a property. Once you close a property, you're established with your management, making sure you have good communication expectations and how management is going. And then from there, it's future conversations on, how do you scale? Everyone runs out of capital. And I think you would agree with me in this is that like you got to hire out the things for people that are smarter than you, right? Or more experienced than you. And the more coaches you can have around you and surround yourself with like-minded investors, but people that are ahead of you to help you, that's going to help you expedite your own success.
Yeah. And I mean, another, just because this is a big thing, is you're managing the property too, right? I mean, you're managing the property, you're managing the renters, you're dealing with the issues, you're fixing the broken refrigerator. I mean, I know as having a rental myself, the pain and the agony it takes to manage that. And so the fact that you're able to do that for 1, 2, 5, 10, 50 projects, and there's not a large fee that you're charging on top of that because you're making it, like you said, I believe you said building and selling the homes, right? So it seems like a very good win-win. And then how does that differ versus maybe some of the funds you see out there that people are investing in? There's probably a fee on top. Are there some other fees that they charge that you guys don't?
Well, when you talk about investing in a fund, which could be a syndication, it could be a fund that's composed of notes, it could be a REIT. I mean, that's just completely a different model, even though real estate is still like the widget, it's still the asset class. The way that someone is investing in those is completely different. And for example, when you're investing in a syndication, in most cases, you're a limited partner. You're investing capital that someone else is completely in control of. Yes, it may be a little bit more passive than physically owning multiple assets, but you may not get the same tax advantages. You don't get to use leverage like you do when you're buying your own assets. And I'm not saying that's right or wrong. It's just about understanding, the right path for you at that right time. We really see a growth strategy with people owning physical assets because you're in complete control. You're 100% owner of that asset. Yes, there's a little bit more noise with, people leaving and renovation and repairs. Like we'll handle that for you. But yes, you have extreme tax advantages there that you get the sole benefit from. You have complete control. You have diversified projects. So all your money's not in one project or one operator. If that goes south, like in a syndication, you could lose all your capital potentially. I've had that happen to me, versus owning your physical assets. Why most people don't own a lot of individual real estate assets is to your previous point about like, it's just headaches, right? Trying to manage them. And it's just noise and that creates chaos. We try to combat that with having a central point to manage all those in one central place. And I think a lot of people get to the point where like, hey, I want to scale up. I want to own larger commercial assets. And we've done that as well. We own a lot of commercial retail centers, which you can absolutely do that. But building a strong foundation with residential real estate is pretty much the most proven path to wealth, where you have have the most control. I certainly believe the least risk.
And how did you guys come up with this concept and kind of what you're doing? Because I agree with you. Funds is a different investment vehicle. Probably the best way to describe this is if you're buying 5 houses on your own and doing it yourself versus working with you guys, right?
Yeah, so I mean, this came out of just out of necessity of our own investing. My wife and I decided we wanted to invest in different locations because our local market, while we started there, and there's nothing wrong with starting locally. Well, I was stationed in Grand Forks, North Dakota in the Air Force, and that's not like a highly sought after area to invest, but it was where we started. But we soon learned that all the successful investors, we surrounded ourselves with were diversified in multiple markets. And there was a reason they were investing in those areas because they were growth markets where houses were appreciating over time and had better cash flow and all the things. And so we started to invest in those areas for ourselves. We had friends and family and colleagues that came to us and said, "Hey, we see the success you're having in real estate. Like, we don't have the time, the energy, the know-how. We're not local. Like, can we invest with you?" And so we started to help people do the same thing that we were doing because we already had the teams and systems established. And then we realized there's a higher demand and need for people that also want to own real estate that don't want to self-manage. We built it out of our own investing endeavors.
All right, jumping back into rapid fire as I got distracted, but it was very interesting. What's a deal breaker for an investment that you guys are looking at?
If I guess, I mean, that could be a lot of different things, but let's start fundamentally you're talking about the investments, right?
Yeah, it's
For
like
us.
why you would not do an investment? What is a deal breaker? It's like, yep, just not worth it.
There's so many because we have our criteria that things have to be bent. But if we're looking like on a broad market scale, there's a lot of states that it doesn't make sense for us to invest in. A lot of
Yep.
these are bluer states. Not that I'm, getting political, but just candidly from owning rental properties, we don't want rent control on the houses. We don't want to be in areas where you can't evict a tenant in an efficient manner. We've heard these horror stories of tenants squatting in houses, not paying rent, damaging the house for a year plus, and there's nothing you can do about it. Like, we don't want to deal with it. That's not sustainable. We want to be in areas that have landlord-friendly laws, that have favorable tax structures for investors, that have a significant undersupply of housing, that have affordability, have a strong rent-to-price ratio. And we want to be in areas where you can buy a new construction house for $200,000 to $300,000 and rent it out for, I don't know, close to that 1% rule or slightly less, where you can have positive cash flow and you get to benefit from the appreciation over
Mhm.
time because the average house price is not $1 million. So, I mean, there's a lot of locations that simply don't make sense for us because of those things.
If you could do it all over again, what's the one thing you would change?
I think everyone in hindsight could say, "I wish I started sooner and I was more aggressive." And I don't know honestly if I'd change anything because I feel very fortunate for where we're at today. I've made a lot of mistakes. For example, one painful mistake would be investing in locations that we didn't research adequately and were low income areas like C and D class areas where we put a lot of time and energy and money into renovating houses that ultimately the tenants really just didn't appreciate and destroyed. And it seems like they were just moving every 6 to 12 months, and like we just were spinning our wheels on those properties. Now we focus on better class locations, better tenant class, like A and B class areas, being slower to jump into partnerships with people, date before we marry. I think that's a big thing, lesson in business, but that's probably a story for another time.
Love it. Well, cool. So, people that are interested in working with you, what's the best way to reach out to you, get in touch with you?
We always want to drive all traffic to our website. That's rent2retirement.com, rent-to-retirement.com. We have a very robust podcast and YouTube channel with hundreds of thousands of people following us. We put out a ton of information about market data around lending options, like whether you want to invest with us or not. It'd be a great place to just learn about different markets investing. If you're interested to speak to our team, you can also text REI to 33777. We'd be happy to set up a time with you and just talk about investing nationwide and talk about your goals.
What's been the most effective thing for you to kind of get the word out about your business? Was it YouTube? Were there other tactics? And how have you built it from a marketing perspective?
Yeah, we have four main. We bring in, so we have a community of over 1.5 million investors we've curated over the past decade. We bring in about 600 to 800 new leads a week, and that's from really four main sources. So we have a whole marketing team that is paid media, and that's probably the majority of the leads, probably
Yeah.
60%. We also have our organic content, like our YouTube is close to 320,000 subscribers. We put out a lot of organic content. That took a lot of time and energy at the beginning, but now it's paying off because yes, we do get a strong portion of business from those. We also are part of a lot of real estate communities, both online and in person, and just presenting and sharing information, I think is really key. And then word of mouth would be the fourth. And we also have a lot of repeat business and people coming back to us. As I mentioned, investors are continually buying investment properties. So that's kind of been the main growth factors for our lead sources.
What do you see as the end goal with this business for yourself and your family?
We're having a lot of fun doing what we're doing. We're very passionate about real estate. I will never, I mean, I love running our business because I'm always learning. real estate investing, as I mentioned, is a lifelong journey. And, I think it's something that if you're really passionate about real estate and being a sophisticated and savvy investor, like you're always learning something in real estate. So we love participating in our business. We're passionate about helping people reach their goal. That's like the fulfillment for us, is seeing people come back. And not saying real estate is, rainbow and sunshines all day long. Like there's issues that happen,
Yeah.
right? Real estate is real estate. You are housing people, but we really feel fortunate to have helped a lot of people. We have thousands of investors that have, reach financial independence or their goals through real estate investing. That's really rewarding for us. So we're having a lot of fun just doing what we're doing and opening up new markets, forming some new strategic partnerships with, national regional builders, so we can bring more opportunity, more markets, and unique investment options to our investor community. I mean, that's really what it's about. So again, regardless of what's happening in the, the economy in the U.S., like we're just grinding away doing the same thing that's worked for centuries in real estate.